This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. The thaw we were hoping for just hit a wall of ice. Let's get you caught up. The 60-second commodities flash. President Trump just announced he is not satisfied with Iran's latest proposal to reopen the Strait of Hormuz. The Pakistan-led peace message was reportedly rejected by the White House, keeping the world's most vital energy artery under a dual blockade. Brent crude is reacting violently, trading up nearly 1% at $109.30 a barrel. With the ceasefire looking shaky and the US-Iran risk index climbing, analysts are warning that $110 is no longer the ceiling, it's the floor. Gold is holding steady at $4,640 an ounce. It's a classic tug-of-war. Surging inflation from energy costs is pushing prices up, while a higher-for-longer Fed is keeping the dollar strong, capping any massive breakout. Activist giant Elliott Investment Management just took a massive 5% stake in Nippon Express. Shipping and logistics stocks are leaping as investors bet on a massive structural overhaul of global supply chains amidst the Hormuz chaos. Asian gas prices are screaming higher as Qatar's Laffan export complex remains offline. With 20% of global LNG supply effectively trapped, Japan and South Korea are scrambling for alternative cargoes, driving a massive premium in the spot market. Now, let's go deeper. Trump's rejection of the Iran proposal has formalized what we're calling the dual blockade. Yesterday, we talked about a potential thaw, but today the reality of a dual blockade has set in. On one side, the US Navy is blockading Iranian ports. On the other, Iran is effectively tolling or targeting commercial traffic. This isn't just a military standoff, it's a liquidity black hole for global trade. Point 1. The toll of uncertainty. Iran's proposal reportedly included tolls of over $1 million per ship to pass. Trump's rejection of this extortion means the strait remains a high-risk zone. For a commodity trader, this is the worst-case scenario. When the rules of the road are undecided, maritime insurance doesn't just get expensive, it becomes unavailable. Banks won't touch a cargo that isn't covered, meaning millions of barrels of oil are currently financially invisible. Point 2. The rise of ghost capital. Because of the blockade, we are seeing the birth of a massive shadow fleet. Traders are using older, uninsured vessels and complex transshipments to bypass the strait. This ghost capital moves outside the regulated banking system. While it keeps some oil flowing, it drains liquidity from the transparent, regulated markets. This fragmentation means the price you see on your screen, like $109 Brent, doesn't reflect the massive under-the-table premiums being paid for actual physical delivery. Point 3. The Fed's energy tax trap. This stalemate is forcing the Fed's hand. Energy-driven inflation is now a permanent fixture of 2026. Because Trump rejected the easy deal, the Fed will likely keep interest rates high. This creates a dollar squeeze. When the USD is too strong and energy is too expensive, emerging markets can't afford to import. We aren't just looking at a supply shock. We are looking at a global demand collapse caused by a lack of affordable trade finance. The trade flow take. We are moving from a crisis to a new regime. The rejection of the peace proposal signals that the Strait of Hormuz will remain a bottleneck for the foreseeable future. The smart money is moving out of high-volume trades and into logistics infrastructure and hard assets like gold and copper. These are the assets that can weather a long-term liquidity freeze. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.